I got a $40,000 tax refund in 2024, which was basically all the taxes that I had paid throughout the year as a W-2 employee, not as a business owner. Honestly, the reason that I even make this video is because I think it is very possible for a lot of you to do something very similar. It's not easy to do, but it's definitely doable. So we own 4 rental properties and we did what is called a cost segregation study on our 4 rentals, which is basically a way for rental owners to front load the depreciation and save on taxes today as opposed to in the future. There is a way more detailed explanation about this. If you want to learn more about it, just ask ChatGPT. It'll explain it way better than I can. But there are companies or engineers out there that you actually pay to do these studies for you. It's not a free service. I would say on average it's probably about $2,000 per house that you pay for them to do. But that $2,000 that you pay them is going to be way less than what you'll save in taxes. Normally this strategy actually wouldn't benefit me as a W-2 employee because you have to be spending at least 50% or more of your time on the rental business as opposed to your main thing. Or you have to prove that you're working at least 750 hours or more per year on the rentals. So if you're a W-2 employee, the IRS will look at that as your main thing and not qualify you as a real estate professional. And so the way that we kind of worked around this in a legal way, obviously, is my wife is not a W-2 employee. And so we put her as the real estate professional and made sure that she spent 50% or more of her time on our rentals and that she got her 750 hours in for the year. And because we file our taxes married filing jointly and she qualified as a real estate professional, that helped offset the W-2 taxes that I had paid throughout the year. So if you want to do something similar to what we did, here are the exact steps that we took to be able to do this. Number one is that we bought a rental property. There's obviously many ways that you can buy a rental property. I'm not going to go into the different strategies right now. Number two is you place a tenant in that rental property. Number three is you get with a cost segregation company and pay them to do these studies for you. When they are done, they will get in contact with your accountant and let them know how much they can accelerate the depreciation by and how much that'll save you in taxes. When you go to file taxes for the previous year, your accountant will pretty much do the rest and it will help offset a lot of the taxes that you would have normally had to pay. So again, this strategy is obviously not for everybody, but if you feel like you're in a similar position as me, where your wife can qualify as a real estate professional, this is a strategy that I've started to implement just last year to help save in taxes, and I plan on doing this strategy moving forward. Hopefully this wasn't too jumbled and that it makes sense. Obviously a few minute video isn't going to give you the full picture, so I would recommend doing some of your own research, and if you have any additional questions, please let me know. I'd be happy to help with whatever I can, and have a great day. Peace.